What if your next big financial move isn't in banks, stocks, or real estate, but in digital money? This is not a trend. This is the future. Let's break down crypto, clearly and completely. Crypto. Before you miss out, let's break it down, and with zero hype. Cryptocurrency is a form of digital money that exists only online. Unlike traditional currencies, there are no physical coins or notes. It uses encryption techniques to regulate the creation of new units and verify transactions. The key feature? It's decentralized. No bank or government controls it. It runs on blockchain technology, a public digital ledger. Transactions are peer-to-peer, with no middleman. This means you can send or receive money globally in minutes. It's borderless, secure, and completely transparent. Crypto is changing the way we think about money forever. Bitcoin was the first cryptocurrency, launched in 2009 by Satoshi Nakamoto. It emerged after the 2008 financial crisis, providing individuals with a way to manage their finances. Bitcoin introduced the world to blockchain, which records every transaction permanently and publicly. Since then, thousands of altcoins have entered the market, each with different features and goals. While Bitcoin remains the gold standard, others like Ethereum, Litecoin, and Solana are building new ecosystems. Crypto is no longer just a currency, it's a technology revolution. Crypto runs on the blockchain, a public ledger that stores every transaction. When you send crypto, the transaction is verified by miners or validators and then added to a block. These blocks form a chain, hence blockchain. Think of it like a shared global spreadsheet that's impossible to edit without approval. This ensures security, transparency, and trust. No need for a bank to approve or confirm the transaction. Everything is recorded and visible to the public. It's fast, efficient, and designed to eliminate fraud. The most popular is Bitcoin, but there are many more. Ethereum is known for smart contracts, automated agreements built into the code. Cardano, Solana, and Polkadot each solve different problems, like speed or scalability. Stable coins like USDT or USDC are tied to real currencies and are less volatile. There are also privacy coins like Monero that focus on anonymous transactions. Each crypto has its blockchain, community, and use case. Understanding their differences is key before investing. People invest in crypto for its high return potential. Bitcoin went from a few cents to tens of thousands of dollars. It's borderless, open 24/7, and doesn't rely on banks. Many see crypto as inflation-proof, especially as traditional currencies lose value. It's also a way to diversify your portfolio. In some countries, crypto is a lifeline against corrupt governments or failing economies. Whether for freedom, profits, or protection, crypto is attracting both individuals and institutions worldwide. Crypto is volatile. Prices can jump or crash within minutes. Scams, fake tokens, and rug pulls are common. Some coins have no real value but still pump due to hype. There's also the risk of losing your private keys, which means losing access to your funds forever. Unlike banks, there's no password reset. The market is still unregulated in many regions. That's why it's important to research, use secure wallets, and only invest what you can afford to lose. Education and caution are your best tools. To use crypto, you need a wallet, a digital tool to store your private keys. Hot wallets are connected to the internet and easy to use, while cold wallets are offline and much safer. You buy crypto from exchanges like Binance, Coinbase, or Kraken. These platforms allow you to trade, buy, and sell your coins. Always enable 2FA two-factor authentication and never share your seed phrase. If someone has your private key, they have your money. Security is your responsibility in crypto. Mining is how coins like Bitcoin are created. Miners solve complex math problems using powerful computers, earning coins as rewards. But mining is energy-intensive and often expensive. Newer systems use proof of stake, POS. In POS, you stake your coins to help secure the network and earn passive income. Platforms like Ethereum 2.0, Solana, and Cardano use staking. You can also earn rewards via liquidity pools or yield farming. These are key parts of DeFi, decentralized finance. Crypto is powering the next evolution of the internet, Web3. This new web is decentralized, giving users control over their data, identity, and assets. One exciting part is NFTs, non-fungible tokens, digital collectibles like art, music, and more stored on the blockchain. NFTs prove ownership and authenticity. Web3 apps, built on blockchains like Ethereum or Polygon, aim to replace platforms like banks, Spotify, or YouTube. Web3 is still early, but it's a growing part of the crypto revolution. Countries are reacting differently to crypto. El Salvador made Bitcoin legal tender. China banned it completely. In the US, crypto is legal but still lacks clear regulation. Governments want to prevent scams, protect investors, and collect taxes. Regulations can help crypto go mainstream, but too much control could limit freedom. It's a delicate balance. As crypto becomes bigger, expect more rules, licenses, and compliance. But even with regulation, blockchain innovation continues to grow. Crypto can be a smart move, if you're prepared. Start with Bitcoin or Ethereum and learn before you leap. Don't follow hype or random influencers. Study white papers, check real utility, and avoid chasing quick profits. Set a budget and stick to it. Use hardware wallets for long-term storage. Understand market cycles like bull and bear markets. Think long-term. Crypto rewards the informed, not the lucky. If you treat it like a casino, you'll lose. If you treat it like a business, you'll grow. Crypto is still in its early phase, like the internet in the 90s. Major companies, banks, and even governments are getting involved. We may soon use crypto for daily payments, loans, contracts, and even voting. The rise of DeFi, NFTs, and Web3 will push this space forward. Not all coins will survive, but the technology behind them is here to stay. Those who educate themselves today could benefit massively tomorrow. Innovation, adoption, and awareness will shape the next financial system. DeFi, short for decentralized finance, is a fast-growing part of the crypto world. It removes banks and middlemen from traditional financial services like lending, borrowing, saving, and trading. Instead of applying for a loan at a bank, you can borrow crypto from a DeFi protocol using your existing crypto as collateral. Platforms like Aave, Compound, and Uniswap let users earn interest, provide liquidity, or swap tokens instantly. All of this happens via smart contracts, automated agreements on the blockchain. DeFi is transparent, accessible 24/7, and completely permissionless, making finance global and fair. While blockchain powers crypto, its potential goes far beyond currency. Blockchain technology can be used for supply chain tracking, identity verification, real estate transactions, and even medical records. Imagine buying property where ownership is verified on the blockchain in minutes, no paperwork, no fraud, or verifying a product's origin from factory to shelf in seconds. Governments and businesses are exploring blockchain solutions to make systems more secure, efficient, and transparent. As adoption grows, blockchain will become a part of your daily life, whether you realize it or not. Before investing in any cryptocurrency, it's crucial to do your research, often referred to in the space as DYOR. Start by reading the project's white paper to understand its purpose, technology, and goals. Check the team behind it. Are they credible and active in the space? Look at their tokenomics. How many coins exist, how they're distributed, and what utility they provide. Explore the community, social media, and developer activity on platforms like GitHub. If a project lacks transparency or has unrealistic promises, it's likely a scam. The better your research, the safer your investment. Crypto isn't just the future of money. It's a shift in power, ownership, and opportunity. Those who learn and act now will shape the next financial era, while others watch from the sidelines. So don't wait, subscribe, stay informed, and join the revolution already rewriting the rules.